Hello everyone, it's Mwelwa again, and we are continuing with our energy series. And today I'll be having a very interesting conversation with our friends from Africa GreenCo, the head of business development, Wezi Gondwe. Wezi, how are you doing?
I'm well, Mwelwa. Good to speak to you again as usual.
Absolutely.
Thanks for having me.
Absolutely. It's always a pleasure to speak to our friends in the energy sector, and more specifically, Africa GreenCo. Africa GreenCo remains a very important player in the energy sector, and we just felt that it was important to have a conversation with you about what's been going on in the ESI. So I'll get straight into it. Obviously, for many of our viewers, they know that Zambia has been experiencing a major power deficit with load shedding hours now exceeding 12 hours. And just to get some perspective so that people can better understand from various people, Financial Insight has been speaking to a number of industry players to just give some context on the current challenge. So Wezi, from your understanding, what has been the major cause of the energy crisis, and from your position, why is it important that this gets addressed?
Thank you, Mwelwa. I think we're facing a very challenging situation from every possible angle that you could look at it, and we know that the major cause has been a deficit in the amount of rainfall that the country received in the last season. So that then led to the president Hichilema declaring an emergency, and you could see that there are multiple impacts that were visible already. So agriculture was highly impacted. We're reliant on rural and small-scale agriculture, and our crop farming in those areas is rain-fed. But also then our water bodies did not receive sufficient charging to maintain a level of generation that that would have prevented or limited load shedding. Typically, we see when we have a bad season, load shedding starts in the second half of the year. This year we started in March, and we are already at 12 or 14 hours. So it's a very dire situation where there's a lot of investment that's happened, that's taken place to install the necessary capacity, the machines, to actually generate well over 3 gigawatts of electricity in Zambia. But the volumes of water to drive those machines is just not there. And we are at very low levels in our major reservoirs, Kariba, which we share with Zimbabwe. And so, we're now, really rationing out, whatever we can get to see us through, hopefully, to, an early and sufficient start of rains this year.
Absolutely. Now, obviously, from where, GreenCo are sitting, we understand that, some of the solutions that might be required will require a bit of, innovation, as it were. Are you able to just tell us so far, in terms of some of the conversations that you've had with certain industry players, how this has been impacting them, and why you feel that there's a need for us to, critically address the situation?
Yes, Mwelwa. So this is a call for us to focus and I think accelerate initiatives that were already underway. It just brings into sharp focus the need for us to diversify our generation mix. We've got our Vision 2030, which was developed 2015, 2016 as a response to another crisis that we had back then. Since then, one would estimate almost every other year we do have the climate change effects impacting our hydrology. And while new capacity has been added, we need to, I think, drive with greater urgency initiatives like open access and start attracting investment to Zambia. It doesn't help that we came out of a sovereign default situation. There is a process going on right now of debt restructuring, under an IMF program. But with that coming to a completion now, we should be signaling to the capital markets that Zambia, should again be a destination for long-term investment. Putting new generation onto the grid is not a quick process. Putting up a facility, and we must be careful not just to talk about generation, but transmission as well. Because as you talk about increasing capacity on the generation side, you need to have the whole downstream, value chain, organized and capacitated to absorb, what we're injecting into it. So these are long-term projects. We've got a crisis now. We're not going to add capacity all of a sudden in 1 year. But what we do need is a very steady, consistent and predictable stream of projects that are coming on and adding capacity to the grid and moving us away from, an over-dependence on hydrology. So we're talking wind and solar, biomass, and a whole mix of other technologies. I think from a GreenCo perspective, it's important that these are sustainable, that they don't add to, the negative impacts on climate, and reinforce the cycle that has produced the situation we find ourselves in today.
Right. Now, obviously you have first-hand experience with working with different power, developers. There's been several conversations that you've had, over the course of, your company's existence. But then when we are thinking of particular projects around energy, and you have mentioned that these projects do take a bit of time, and one can imagine that there's resources that are required. How important then now is going forward with the development of some of these new projects for us to ensure that, on the one side, the developers of these particular projects are fully rewarded for the investments that they're making, but then also having a sustainable sort of financial structure around the industry?
That's the fundamental question that needs to be addressed in our electricity sector, electricity supply industry. And it really starts from, having a market that pays, a fair price for electricity. And that then, filters back up the chain, into a cost or a price that a generator receives, the provider of the transmission network and the operator of the system, the remuneration that they receive, for investing in those assets. Ultimately, the consumer must pay for that, and that then unlocks the investment. Whether it's the private sector investing or the national utility or the government directly, capital costs something, and you will pay for it one way or the other, directly through that tariff, or indirectly if you you subsidize. That cost is going to be paid one way or the other. The sustainable way is to ensure that there is a tariff migration over time that moves towards cost reflectivity and provides a fair return on investment. So as we progress, I think it's very heartening to note that I think for the first time in our history, the ERB instituted a multi-year tariff migration plan last year. It's a 5-year plan. Every year there is a review that will take place to ascertain and confirm that the required increase is implemented. That's very important. As I said, it signals to all players and financiers that there is a path towards cost reflectivity. And ultimately, from a GreenCo perspective, we see ourselves then moving a gear up in terms of scaling up and bringing in more capacity, because we can see that the power that we contract and that our portfolio of IPPs is going to generate is going to be viable in the market. And in the long term, it helps the economy. When people calculate the cost of energy, I think it's very easy to look at the headline number and say, well, I'm not paying X cents. Okay, but when you don't have that power, you're going to rely most likely on more expensive sources or have to curtail your operations. Now that's the true cost of what your energy cost calculation should be, is what am I going to, what's my backup, or what is it really costing me if I have to shut down my factory for 12 hours a day, etc., etc. I think, for a long time in Zambia we paid low tariffs, but I think, through the process of engagement with stakeholders and everyone, I think there is an acceptance that there is a fair price to pay for electricity, and in the long term, that higher cost is going to serve everyone well, and result in a more stable, availability and security of power.
You touched on the multi-year tariff determination. These are things that are, enshrined in the Electricity Act of 2019. One of the things that we also observed is, that also speaks to the importance of paying the fair price, is issues of what actually constitutes a cost-reflective tariff, as it were. So meaning that what you're saying is that, the developers of projects, the energy companies have to be compensated completely so that you can have a sustainable electricity supply industry, meaning that things like such as cost pass-through have to obviously be a conversation to consider.
Yeah.
Would you say so?
Absolutely. We've got a collective responsibility, at a macro level, of ensuring that Zambia is perceived and is indeed, an attractive destination for investment. What that means is when capital considers Zambia, they're going to demand, or it's going to demand, a certain premium for taking risk on a market like Zambia. And that risk, permeates and is calculated through multiple lenses, that results in a certain number that providers of capital are going to demand. So that's the first level, to say how attractive is Zambia as a destination for capital. That will apply to the electricity sector, the mining sector, the agricultural sector, and you'll see a response from markets across the board to all of these sectors when they look at Zambia. That's the first thing. The second thing is, from the electricity perspective, we know and can benchmark globally, what it should cost. It's not complicated to arrive at a ballpark figure of what it costs to invest in a megawatt of hydro, depending on the configuration of it, or solar or wind. And we have to make sure that when we're engaging with potential investors in generation, they're working with a reasonable rate of return that they require. When we are, having that power wheeled through the network, the system, to users, there must be an appropriate, compensation to the national utility and other network providers, because they have to cover the costs of operating that network, and not just, current costs, but also provide for future investment into expanding that network, because we're talking about growth and sustainability. So that involves stakeholders, the providers coming together, the regulator also being at the table to determine where there's an element of the regulated tariff coming into play, so that when it comes to using systems, for example, there is a fair determination of an appropriate compensation to the provider that results in a cost that the consumer or the user ultimately pays. There are many frameworks, around the world and in the region for how you derive that, and we have to develop. And I believe our regulator, the ERB, is already in the process, of determining what those costs should be for all players in the market, as far as accessing the grid and so on and so forth, so that it's even, it's level, and there is no, we talk about pass-through. The consumer is comfortable that what they are paying is a market standard price for the service being delivered.
Now, with issues that you brought up, such as having an energy mix, how important will that be, not only just for the consumer, but in terms of having a sustainable ESI? And from your assessment, is the current regulatory regime especially around the 2019 Electricity Act. Is it enough to ensure that that is achieved?
You know, when we talk about private sector investment, the moment a market is conducive, investors will move, and you will see, the build-up of generation assets and even investment in transmission, and we will have, I think, not a single approach, but a multifaceted approach to adding generation. In South Africa, for example, you had the REAP program that has been, a public sector program with Eskom as the buyer. But because of the market design and market structure, it's meant that, private sector investment supplying directly to consumers has also been happening apace and picking up momentum, happening alongside that. And we need this mix of models to work together in the market to make things. Because there's no one way that will build capacity quickly enough. You need a mix that accommodates multiple models to deliver what we need. And it's all about having an appropriate market design and structure that makes sure that there are no obstacles, whether technical or commercial, and really encourage and foster investment to flow.
Absolutely. And on the issue of a corporation, one of the things that we also know is that GreenCo is a member of the Southern African Power Pool. How important is regional cooperation and integration going to be, especially in the current power deficit that we have?
I think one cannot overstate the importance of being regionally integrated is in the present situation, but also in the future when we talk about private sector, increased participation in energy investment. So of immediate relevance is the ability and the pathway for Zambia to import some power from other markets that may have a surplus, that are maybe less impacted by the climate impacts, the hydrology, or maybe have a more diversified mix of technologies. As we announced in the market a few weeks ago, we're involved in importing some power into Zambia, and that would have been very difficult had we not been a member of the Southern African Power Pool. So that's one kind of immediate relief that regional integration provides. In the long term, the GreenCo model is premised on the SAP being a market through which trade across the region, importing and exporting, but also mitigating project risk, is going to happen. Moving away from a model that places a lot of financial burden or obligation on the government to ensure that electrons flow. We can now do this purely on a market risk allocation basis. So it's extremely important. Power pools in other parts of the world have served this purpose for a long time. And that's where we come back to price and cost, where you have true price discovery and ensuring that a level of competition results in a fair price to the consumer.
Absolutely. And on a final note, you have actually indicated that obviously GreenCo has been making some efforts to also help the Zambian government. Are you able to share with us, especially during this particular period of the crisis, what initiatives that GreenCo has put in place to also assist?
Yes, as alluded to, so we've been able to secure some power to import from the region into Zambia. This is allocated to large consumers. The structure of the import necessitates or dictates that it is one that would be viable for a large consumer because of the nature of the obligations and the arrangements that need to be put in place. It's a positive overall for the country and for the system because it is added electrons onto the grid. It does provide relief to ZESCO from a generation perspective, in that we can add electrons from offshore into our grid, and hopefully that has contributed to averting potentially even deeper curtailment in the present situation. So being an aggregator and a regional trader, this is something that we can do, and God willing, the situation starts to improve into the latter half of the latter part of the year with better rains, but we're always in the market, as and when we can find power that we can import, we will do so, but understanding that these are short-term measures, and we need to not lose sight of the more long-term sustainable picture.
Absolutely. Now, Wezi Gondwe, thank you so much for speaking to us.
Thank you, Mwelwa. Always a pleasure, and we look forward to speaking to you again.
Absolutely.
Thank you.
Ladies and gentlemen, you've heard it for yourself. I've just been speaking to Wezi Gondwe, who's shared a few insights on the current situation with the power deficit in Zambia and some of the efforts that GreenCo are actually making to help the Zambian government. Stay tuned for more insights from the Energy series on the Financial Insight Show, and get to know.